A lot can be achieved in a matter of 21 years if you have grit and determination. A 3-member team can take the shape of an organization of 7,000 people. The company, which was started by a couple of $1,000, is now taken shape of almost $2 billion in market cap. The guest I have with me on the show today is someone who's a living example of that grit and determination. Let me welcome Mr. Rashesh Shah, Chairman of the Edelweiss Group, on the occasion of 21st year in existence. Rashesh, thank you very much for your time.
Yeah.
And let me congratulate you from Ichi now and all of us, your shareholders and people who look up to you on a tremendous journey of these last 21 years. If we take the clock back, how does it feel?
First of all, thank you very much for your kind words and all. And yeah, if you take the clock back, I think we all have far exceeded what our initial, at least ambitions were. But you know how ambitions are and aspirations are. They keep growing as you keep growing.
Sure.
And what I always say to everybody is, over the years, as Edelweiss has become bigger every year, in our eyes we become smaller vis-a-vis the opportunity. So it's actually gone beyond, because in the early years, I remember a point of time we said, if we can become 100 crore top line company with maybe 100 people, it's a huge achievement, because we started with with a top line of only about 30 lakh rupees in the first year, and with 3 people. So at that time that looked like a big achievement. So I think your ambitions keep on growing, and I think India is a good place to have this kind of aspirations and ambitions.
Sure, the country is full of the DNA of entrepreneurship, and you have very successfully demonstrated that when you started off in 95. But financial services as an industry has also not been a very kind one. There are so many organizations and entrepreneurs who have fallen by the side and perhaps did not have that kind of a successful, robust business model. Talk to us, why did you choose this line of business and some of the challenges which you have faced on the way, and some inflection points as we know Edelweiss today? What are the bumps you faced in the journey?
Yeah, one of the reasons we are very excited about financial services, and we were then and we are even more excited now, is what we have seen is, especially after India started opening up after 1991, there was a huge amount of change. 92 SEBI got formed, 94 NSE came in, 93 FIIs came into India, 94 we had the private sector banks started at that time, we had the private sector mutual fund starting. So I think that era of 92, 93, 94, 95 was huge amount of changes in the financial services industry in India. We all know about the economic liberalization, the import duties coming down, the opening up of the trade barriers in India, and liberalization that happened. But very few people have appreciated the change in the financial system that also happened at that time. So we are very excited, because we do believe that financial services ultimately is the driving force for an economy, because your cost of capital, your flows into investment, capital formation, and for every industry, it's like finance is like blood in the system.
Sure.
You still need the heart and the lungs and all the organs, but the blood has to flow, and that is what finance is. And I think if I look at what has happened in India in 25 years, in capital markets, bond markets, equity markets, foreign investment, governance, research, all of that, we have come a long way. And I think that is what excited us. And when we stand today, now when we look at credit, especially democratization of credit that is going on, with microfinance companies, home loan growing, all of that, a lot of credit is shifting away from the corporate sector to the retail investors and the retail. And this is truly what is going on in the economy. That is very exciting.
Right. Rashesh, you had gained a critical mass between 95, 96 to 2005, 2007, that kind of a period. I remember distinctly covering your IPO in 2007 when Edelweiss was going public. But at the same time, no one would have envisaged that what lied ahead was a financial meltdown. But you, of course, like very few companies, rose from that in terms of business and in terms of listed company as well. Last 10 years have been particularly, a lot of things have happened at the company level. Talk to us a little bit about how Edelweiss as a group has evolved in the last 10 years out of the entire 21-year journey.
So for us, there have been phases as we have grown. So we started in 1996, and from 96 to 2000, the first 4 years were where the foundation got staged. We did a little bit of things out there. Then 2000, 2004 was a fair amount of consolidation. Even that was a fairly bad period. 2001 to 3 was not a great time for the world economy, for Indian economy. But that is where we set a lot of the new businesses. Then 2004 to 8 was hyper growth. We grew almost 300x in those 4 years. Then between 8 to 12 again there was re-engineering. We changed from a capital markets firm to a broad-based financial services firm, started credit and distressed assets and all of that. And between 12 to 16, 17 now again very high, we've been growing at 35 to 40% a year. So what we have seen is there are cycles and there are phases. And actually to use the down cycles very effectively is actually one of the core competencies of a company. So we have always used the setbacks when the economy is slow, when there is a cyclical downturn, to use that to strengthen the organization, invest in people, strengthen business, because that is time you are most efficient. When resources are not easily available, we all find those real pools of efficiency, creativity, ideas, innovation, all of that. The hardest thing at that time is to keep your emotional and financial capital intact. Because you have to make sure that in a down cycle you don't end up losing either your emotional capital or financial capital. Even financial capital is easy to protect, but emotional capital, people become very cynical, very skeptical, and usually it is says that it is darkest before the dawn.
Right.
So when things are truly bad, I think keeping an eye on the future, and what we say in Edelweiss is have a bifocal vision, have your one eye on the long-term India opportunity, which is fabulous, and the other eye on the short-term issues that are there here. So as we say, here there are always issues, there is always an opportunity.
Brilliant.
Keep an eye there and an eye out here.
Actually, you brought up a very interesting point, how to benefit from the down cycle and cut back in shape. Also, this interaction which we are having today is also aimed at a lot of people who look up to you for inspiration. So a lot is already known about the way Edelweiss as a company has evolved. Let's talk a little bit about Rashesh Shah as a person. We all know you head the organization, but talk to us, what are the kind of influences on you over the last 21 years have shaped you as a manager, as an individual, as a person, by which the younger generation who looks up the evolution of Edelweiss and you can learn a thing or two?
So I think over the years we have all been very fortunate, and I keep on saying that we all eat fruits from trees that other people have planted. So in India, when I was in ICICI, we were very fortunate that I met with a lot of entrepreneurs at that time, including people like Narayan Murthy and all. Because Infosys was a small company at that time, but again you saw the growth. I mean, I have seen the growth of Infosys in 25 years, from a small 100 people company to what it is now, a $35 billion market cap company and all of that. So we have all seen great growth stories in India, whether it's an Infosys or HDFC Bank or TCS or Asian Paints. So, and there is a lot to learn. So I think looking at these companies, reading their annual reports, also meeting the management. So I've been very fortunate. I've gone and spent time with people like Anand Mahindra, Adi Godrej, Harsh Mariwala, Narayan Murthy, and learned from them, because these are truly the icons who have created, large organizations, scaled up, especially in much harsher times. I think things have got easier in India in the last 8-10 years, but in the 80s and 90s maybe things were not that easy.
Sure.
But there are people who have built great stuff in India, and also there are a lot of other companies globally also that we admire.
So one thing completely understood, that you have observed successful business models very closely and met the management and tried to adopt good practices into your own life, right? That's what I sum up with. What about the shaping your own philosophy, your mentality? What are the books you read? What are the kind of people you follow, which have shaped you as a person, and by which one can become a better investor into the market? You are leading one of the companies named to reckon with in the financial services space. What are those influences?
And I agree with you, because I think all of us now have to be constantly studying and learning, and I think I find that one of the most energizing things, because there's so much to learn from other examples, from books and all out there. And I find that there is a lot of, I find that most of the things we do have been experimented by other people, done by other people, they've tried it out. And over the years, been very fortunate of, have read all the books like Good to Great, Build to Last. I read a lot of management books by Peter Drucker, because I think I also need to evolve, and we all need to learn a lot. So when we started Edelweiss as an entrepreneur, there was a lot more energy, a lot more passion about getting things done, putting overnight out there. Everything was a project. Then you come to a stage where it becomes a process. You then become people oriented. You allow people to do work, and you move from a hands-on manager to a business head, and then you go towards a leader where you then start institutionalizing and putting systems and processes and make sure that the leadership is growing and how you are empowering and inspiring other people. And there are a lot of smart people out there. So I think to learn to do all that, to constantly reinvent yourself is a very important game when you want to scale up. And again, as I said, a lot of people have done that, so it shouldn't be very hard to do, but it's constant effort.
In fact, you're so being kind that you're attributing a lot of your success also to your team. In fact, being a listed company, I observed that you are one of the heads of the company who have all the way shared the wealth in the form of ESOPs with the top leadership team, and they have actually contributed a whole lot to building the institution Edelweiss is today. But what about influences from the market standpoint? How did you learn the nuances of stock market, the principles of investing? Was it hands-on by burning your own hands, or have you observed people or some experiences which you can share which shaped you as a stock market participant?
I think investing in the market is always about experience, and no matter how many books you read, no matter how many people you follow, no matter how many TV channels you watch, I think ultimately you learn by doing it. And I got passionate about the stock market when I was studying in IIM Ahmedabad, and in my second year, which was 1988-89, the 87 crash had just happened in the US. So I studied a lot of that, understood. And then I was fortunate that in ICICI, got a chance to meet a lot of companies. I got a chance to see companies at a very fundamental level. How do companies create value? How do they, garner all the resources, the financial resources, the other resources, and convert them into what is called creating value? And what is value? In fact, that itself is a quest. How do you define value creation? How do you see while value creation is happening? So in ICICI, I think I got a chance to understand, work with a lot of companies, went and saw a lot of plants and all of that. That was also met a lot of entrepreneurs and business heads and see how they are thinking about capital allocation, about institutionalization, about people development, about how they allocate their own time. In fact, because I feel a leader, one of the biggest thing you do is you allocate your time, you allocate capital, you allocate people, and I think those processes and practices and habits are equally important. So, and then obviously I started investing in the market, as you said, burned my fingers many times, learned things the hard way. But I think that way market is very humbling, but is also a great teacher. And I've seen in the short term markets can be irrational at some points, and some stocks can go up and down. But in the long term, like there is almost 100% correlation between growth in earnings and the performance of the stock price. So how do you see that? We've seen a lot of companies which have re-engineered and come back. So I think that experience in the market coupled with working, and in Edelweiss we've been very fortunate because of our investment banking and other businesses. You meet a lot of entrepreneurs. We do IPOs and all that, and you meet so many great entrepreneurs. Almost every day I get amazed at where do all these entrepreneurs come from in India. Sure. So seeing them, studying them, learning from them. Okay. So both company and market, I think if you want to be really successful at investing, understanding how companies work, how they create value, how they evolve, how they think about opportunities and all, and how the markets evolve. Because there are a lot of people who are only market focused. They follow only the market, but they forget the companies completely. There are a lot of people who follow only the companies but don't know the markets.
So striking a balance.
But I think understanding both companies and markets is the best thing. And one of the easy ways to understand companies is to read annual reports. So I used to, when I was in ICICI, I used to read about 80-90 annual reports a year.
Wow.
And that was my hobby. Maybe not a great hobby.
No,
but I used to enjoy reading them.
That has got you in good stead right now. But you're a fairly successful person now, Rashesh. What is your idea of wealth? And what are some of the guiding principles which you have stood by, which you would like to share with our viewers who look up to you, by which on the one hand they have an eye on wealth, but also not lose sight of principles?
I think there are usually two aspects of wealth. One is comfort, safety for the future, for your kids, having the resources, all that, that is an important part of wealth. And a lot of people start off their life with that aspect of wealth. Okay, I should have enough to buy a house, to make sure my kids have good education, I have enough money for retirement, so I don't have to really worry too much about that. But the other aspect of wealth is to create value, and it's a reflection of the value that you are creating. And as you create more value for yourself, for the society, for the economy as a whole, it's a reflection of that. And for that, you should think of yourself as a custodian of that for future generations and for the society at large. And I think striking a good balance between these two things, one is the personal need, and other is being the custodian, the creator and the custodian of societal wealth in that sense. And I think finding that balance is very important. And we have seen a lot of examples on that also, where a lot of people have made money, they have given money also, or they have used that money for social causes, making an impact on society. It can't be only the second, because a lot of people are also motivated by making sure that they have enough for themselves and their kids. But idea is not to get completely caught up in that also, because that's a never-ending game, and you always want more and more. But if you have enough to take care of your future and your kids and your family's future, I think the other part is an important one, where are you creating value, are you, and then using it for the larger good.
Rashesh, we are also having this conversation at a time, some interesting time, because just a couple of weeks, 1.5 weeks back, some really marquee names have checked into your stock in the form of block deals. The stock is at record high, almost capturing a market cap of $2 billion. There's a lot of promise which is built into the stock. What does the next couple of years, the broad vision for this particular group you have right now?
See, our idea is to continue to grow, and as I was explaining earlier, the last 5 years we have been growing at 37% CAGR, and we have a slightly differentiated model. We have a credit business, which is like any other NBFC. We have 3-4 credit verticals, wholesale and retail, that we operate in. But we also have a very robust asset management, wealth management, capital markets, and those what are called agency businesses, which are very high return on equity, very low capital intensity, and very good franchise business, because you have the research, relationships all out here. And our idea is to combine both of this, the credit and the non-credit part, and continue to grow them. And they've both been growing fairly well. So we, as I said, we have clocked a 37% growth over the last 5 years. We hope that for the next 2-3 years we can maintain this kind of a growth rate. I think anything between 25 to 35 will be good to have, because then now we are truly getting scale and all the businesses are coming of age. So I think the next 2-3 years is just focus on execution, growth, maybe more of the same. And a lot of our businesses have now found their sweet spot, like our distressed asset business, where we are one of the leaders out there, has been really working with banks, helping find solutions on restructuring, cleaning up bad assets. And that is a huge opportunity, which I think for the next 3-4 years will still be there.
Right. In fact, that is one end of the business which the market is really excited about. In fact, I must congratulate you that you were ahead of the curve in spotting that opportunity and filling that gap in your overall scheme of things. But what kind of scalable opportunity are we talking about? Your distressed asset business, ARC is one of them, your global asset management, because that's also a piece you've recently added. And so which are these top 3 areas of the business which will see bulk of value addition? You're a value oriented guy, you spoke to me earlier about adding value. So next 5 years, which are the businesses which will see much of value accretion?
We are actually very bullish on what we call retail and SME credit, especially SME, because one of the things that if you go around, I've gone around, met a lot of SME customers, and when you ask them what is the biggest pain point, for most of them it is credit. If you are a small business in India, one of the biggest pain point you have is availability of credit, at the right time in the right form. And that I think is a big opportunity, because what we are seeing is the first time we are seeing democratization of credit. A lot of credit went to large business groups over the years, and some NPA crisis has happened because of that. But now we are truly seeing that retail and SME credit is a huge growth vector, and people need credit. India's credit to GDP ratio is still very low. So we have a long way to go, and the more credit we are available to people for small businesses, and we have seen that with microfinance and others, to small businesses for home buying and mortgages and SME, and there is just a lot of growth and job creation and economic development that will happen. We are very excited by that. As I said, ARC, we are very excited. On the global wealth management business, which has been scaling very fast, we are now amongst the top 3 wealth managers in India. We have more than 55,000 crores of assets under advice in that. And that business has been growing at 30-35% a year. And that is also looking very exciting. So I think India is at that sweet spot where we truly getting scale. Our economy is currently $2 trillion. In rupee terms, our economy actually now doubles every 5 to 6 years.
So
And
your
that is
company can
phenomenal.
also, at least at a shorter time period, can see the opportunity for your business also grow in the same league?
I think for most financial services company can make an assumption that a doubling of the size every 5 years is there. If you do faster than that, then you are growing better than that, which is what for the last few years we've been doubling every 3 to 4 years.
Great. So assuming that, I'll hope that the run rate is maintained. But you know, one thing which is common about all your business streams and segments is that they have an underline of stock market or the market. And in the last 21 years, you've seen several business cycle, market cycles. If we come back for a moment to the kind of end of the cycle we are in right now, on the valuations front, on the trader or market participant psychology front, what stage or what phase of the market are we in right now?
Actually, a lot of our business actually moved away from the markets over the years, because when you look at retail credit, home loans, SME credit, distress asset, they are not so much market dependent in that sense. And I do feel that market cycles will go up and down. I think normally Indian corporate earnings should grow at 14-15% a year. And over a long term, that is what the stock market returns will be. There will be cycles of up and down, which are all, but I think currently, given post demonetization, the economy has come back well. If you look at the macroeconomic stability in India, it is one of the best that it has ever been. I've never seen a more macroeconomic stable environment for India. Our rupee is stable, inflation is down, current account deficit is down, fiscal deficit down. This is as good a time. So I'm fairly bullish over the next 2-3 years. But markets are markets. Some global things will happen, they'll fall 5-10%. And it's very hard to chase valuations in the short term. But I think, as I said, if there is earnings growth, there will be valuation growth.
Sure. Rashesh, last couple of points. Via various ends of your big business, you are interacting with some of the marquee investors globally, and probably that's the reason they are also participating in your company in the form of shareholding now. On the one hand, on the other hand, you have very good pulse of the big wealthy of our society, of the business world. How are they positioning? They have become a very big force in the market. How are they positioning themselves into the stock market? Real estate is not doing that great. Probably debt is over.
You see, what happened historically for a lot of Indian wealth, a lot of people were very comfortable keeping money in the bank because interest rates were good. You were getting 9-10% interest rates in banks, or you were coming into stock market, or a lot of people were investing into real estate because real estate was giving you 14-15% return per year. I think in the last 5 years that has changed. As interest rates in banks have come down, real estate has not given those kind of returns, has been more flattish. More and more people are saying, where do I invest? And now they're coming into bond market. In fact, last 3 years, one of the hidden story of Indian money coming into bond market has been a great opportunity. They are coming obviously into equities, through mutual funds, SIPs. They are also investing through insurance for long-term, accumulation. So I think increasingly financial assets are growing, and things like real estate and all has gone down. And in financial assets also, the bank deposits are going down because interest rates have come down, and they are more moving to insurance, mutual fund, stock market, all of that, which is great for an economy point of view, because this is truly risk capital. This can allow the economy, the entrepreneurs to take risk and really build out businesses. So capital formation is now starting to happen, and I'm fairly bullish. So though people say that credit growth is slow in India, I think capital formation growth is still going on. My last question to you is, for viewers who are watching this, younger ones who just come into the capital markets or have been around for sub 5 years, what are the 3 principles of managing money or handling money or investing as a guide you would like to tell them, so that they can become successful investors and create some serious wealth over the long term? I think if they are constantly watching your channel, they're obviously getting a lot of wisdom from a lot of people. But I would say first principle is think long term, because investing is a compounding game. It's a long term game, and between 20 years and 30 years can make a huge difference. And if you, as you said, your viewers who are younger, they have this particular benefit of having the long term. One of the strange thing happens when you're very young, you're also very short-term oriented. When you get older, you become very long-term oriented. Ideally, it should be the other way. So I think when you are young and being long-term oriented and thinking in the next 20 years is very important. The second thing I would say is you make your mistakes, make them as affordable as possible, as small as possible in your early part. So don't go and borrow a lot of money and bet your house on that, and don't take too many risks, so that it will hurt you. When it hurts you in the early part, then you become so risk conscious and risk averse that you won't be able to capitalize. And think of this as getting better and better at investing over the next few years. And this is like a old wine that as you get better with age. And that is, and the third I would say is keep your emotional capital. I mean, this greed and fear and getting very panicky is very easy. But as Hindi mein we say, mansik samtulan is very important. So keep your mental balance and ultimately, as somebody has said, investment should be there to allow you to sleep at night. If they keep you awake at night, then something wrong is happening. So make sure that you have an investment strategy that allows you to sleep well at night.
On that educative note, Rashesh, I would like to thank you so much for having this conversation. I'm sure a lot of viewers will benefit a lot from it.
Thank you.
Thank you very much, and good luck for the next innings of Edelweiss Group.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.